with stocks crashing and as many investors asking why. I'm your host, Steven Van Metre, and thanks for joining me today. As many investors believe we are on the cusp of a generational bull market, and now all of a sudden it looks like we're in a bear market. And of course, investors are asking what is driving this sudden change of sentiment and liquidity. And let's head over to the Wall Street Journal, who headlines that the IMF cuts global growth forecast amid supply chain disruptions, pandemic pressures, as the group also raised its inflation outlook, urging policymakers to stand ready to take swift action. In a couple of days, we're going to see what the Fed has to say. In the IMF's latest World Economic Report, released on Tuesday, economists cited the spread of COVID-19 Delta variant and said the foremost policy priority is to vaccinate an adequate number of people in every country to prevent dangerous mutations of the virus, such as the Omicron. They stressed the importance for major economies to fulfill pledges to provide vaccines and financial support to international vaccine efforts before new variants knock continuous recovery off track, which it seems to be happening right now. In raising its inflation outlook, the group urged policymakers to stand ready to take swift action if the recovery strengthens more quickly than expected or inflation risks become pronounced, seemingly just as they are now. And prices from food to medicine, as we talked about earlier, to vehicles have risen worldwide, threatening the global recovery after the pandemic wiped out businesses and jobs. And I think that is one of the key things to understand here is why inflation leads to recessions, because you can see it on this chart here, where you'll notice I've circled all the points where we see high periods of consumer prices or spikes in consumer prices, and all the red ones are when it leads to recessions, suggesting that we're not on the cusp of a bull market, that perhaps we're about to enter a massive global recession. And the IMF cut its global growth forecast, which makes sense, for 2021 from 5.9 from 6% in its July report, a result of a reduction in its projection for advanced economies to 5.2 from 5.6. Between you and me, that might be a bit rosy. The reduction mostly reflected problems with the global supply chain that caused a mismatch between supply. And here you can see another reason why is corporate profits after tax against the Wilshire 5000. And if corporate profits are headed down as growth heads down, well, guess what stocks are going to do? They're going to price that in. And while the IMF maintains the view that inflation will return to pre-pandemic levels by mid-2022, it also warns that negative impact of inflation could grow further if the pandemic-related supply chain disruptions turn out to be more damaging and long-lasting, and it looks like they probably will be. And that could result in earlier tightening of monetary policy by central banks, holding back the recovery. And if you're concerned at all about what the Fed's about to do and inflation and the risk of a recession, well, you shouldn't be when it comes to your portfolio. Be sure to check out Portfolio Shield. You'll be glad you did. Now let's continue on with the story, because here you can see the consumer price index against crude oil prices, suggesting that at some point inflation will come down. But as we talked about in an earlier show today, food prices are likely to remain sticky, and energy prices, while one component of the CPI will head lower, others may not, keeping inflation high too long and policymakers tightening too much. And let's head on to another article from Wall Street Journal titled Post-COVID Global Economy Falters Due to Inflation and Supply Chain Woes, as a stream of new data suggests third quarter slowdown as manufacturers struggle to get those materials and components. And we're seeing that in the data. Should household businesses and investors begin anticipating the price pressure from pent-up demand to persist, there is a risk that medium-term inflation expectations could drift upward and lead to a self-fulfilling rise in prices, just as they are now, says the IMF economist. They added that for now, there are no signs of such a shift. Well, IMF, I think you got that one wrong. Food price increases have put particularly great burdens on households from poorer nations. The IMF Food and Beverage Price Index rose 11.1 between February and August, with prices of meat and coffee rising 30 and 29% respectively. It's highly likely that those numbers may get even worse. And that's not good. While monetary policy can generally look through transitory increases in inflation, central banks should be prepared to act quickly if the risk of rising inflation expectations become more material in this uncharted recovery, according to IMF Economic Counselor and Director of Research. Well, I'll tell you what, there's one thing that monetary policy wasn't designed to solve, and that's supply chain disruptions. And that's a bad combination for a recession. Let's keep going, because post-COVID global economy Oh, that has the same title as China's economy is also expected to decelerate rapidly in the third quarter, as we've talked about, as the country was battered by an unexpected shock and such as sporadic outbreaks of COVID-19, widespread power shortfalls, as well as cooling property market. China's economy is expected to grow 5.1% in the third quarter, according to Wall Street Journal economists. We actually know that it came in at 8.1. Now let's end this show with the notion that the risk to the stocks right now isn't just the Omicron variant. It is actually inflation, supply chain issues, and monetary policy as we see central banks tighten too much. And on Wednesday, well, we're going to hear from the Fed, and then they're going to tighten too fast and drive the economy into recession, just like they always do. I'm Steve Van Metre. Thanks for watching. Bye now. The content of this video is provided as educational information only. It's not intended to provide investment advice. This video will not be construed as recreational or solicitation by a security financial instrument or participate in any particular trading strategy. This video was prepared by Steve Van Metre. Personal capacity, opinions expressed in this video that do not affect the view of Atlas Financial Advice Inc. or Steven Van Metre Financial.